Hi everybody, Rob here with Velocity Portfolio. I wanted to do a quick video to make an announcement on an addition to this channel. It's going to be a new addition, new series that I wanted to start doing. I mentioned in my most recent video in the recap last week that I have some debt accounts that I wanted to possibly change up and do some different things with. I have a Roth IRA in my wife's name that has a little bit of money in it, not much. I have a Roth IRA of my own that has like around $10,000 in it. I've decided to leave those alone. I'm just going to put them in the S&P, or they already are invested in the S&P, and let them do their thing and just grow for the next 30, 40 years. And then I also have, we both have company 401ks, so we're contributing up to the match on those to get that free money. And then eventually, when we leave our jobs, we'll figure out what to do with those, either roll them into another account or whatever our options are at that time. Obviously, the goal of this channel is the Velocity portfolio. And the goal of all of my income is going into this portfolio. So that's the overarching, still the main purpose of all of this. But with this, and all projections showing that the next 5 or 6 years that I'll be able to get out of the quote rat race. It got me thinking, well, what do I want to do about some of these accounts that I have sitting in various institutions with money in them that I can't touch until after 62, 65, 67 and a half, whatever the retirement age will be at that time when it comes. And I could just let them sit there and grow, but I like to tinker and mess with things and try different things. So all that being said, I fully expect the Velocity portfolio to completely cover my lifestyle and will for the rest of my life. Once it gets to that point where dividends and income is fully covering my expenses. But then I started thinking, okay, I've got another account that I haven't talked about yet that has a decent amount of money in there. And there's a lot of talk about rising healthcare costs and things like that. And I thought, okay, what if I use this account that is just sitting doing nothing kind of right now? What if I used it to maybe create some income to use for that down the road, since I can't touch that money without penalties and taxes and all that till after I'm 60 years old. So I thought of maybe using that account to fund that portion of my expenses. May or may not be needed, but just kind of a goal, right? So with that being said, the account is a traditional IRA. And this account, just to go back a little bit, I've had this account since my early 20s when I worked in retail going through college and knew nothing about investing, but I was told, hey, you get free money if you contribute into this 401k that the company offers. And I thought, okay, great, cool, free money. I like that. So over the years working with this company and another company, I put whatever the match was, I contributed up to that, whether it be 4% or 6%, whatever the case is. And then over the years, I'm now 38. So over the last like 15 years, I've rolled it from employer to employer and then eventually rolled it into a traditional IRA. All that being said, there's only about like $45,000 in there right now. So you can kind of see how like I haven't really known what to do with it for quite a while. It should be a lot more. It would be a lot more if I continue to contribute to it. But now it's just kind of sitting here, and I've been tinkering with it a little bit. Selling some puts and trading some things in it, trying some speculative stuff, trying to just mess with it and see what I can do. And none of it's really kind of panned out. So I've decided to convert this account, this traditional IRA that I have that I can't touch until I'm after retirement age, whatever that might be. Right now it's in my 60s. I don't really think I'm going to need this account, right? Because Velocity Portfolio is going to fully cover my expenses here in like 5 or 6 years if everything goes according to plan. So I thought, okay, what if I use this account to use a strategy, a popular strategy to see if it can be a viable source of income to use in retirement when I get to that age, or use maybe for travel, or use for healthcare expenses, or whatever it might be. So what I'm going to do, long story short, after rambling as much as I can on this, I'm going to convert this traditional IRA into a wheel strategy, kind of a more traditional wheel strategy. So what I'm going to do, I am currently converting some of the assets into cash. I'm cashing out everything and putting it into cash. It also sits at Schwab with Velocity Portfolio. These are the two accounts that I have with Schwab. I think when I close everything out in this account, it's going to wind up being probably around $42,000 or $44,000. Now, what I'm going to do, I'm going to convert it into an income. I'm going to call it the IRA Options Income Series. So Velocity Portfolio, I'm still going to do the weekly recaps on the weekends, on Fridays or Saturdays for the previous week. I'll do some videos here and there as I see fit in regards to Velocity Portfolio. But I think earlier in the week, like Mondays or Tuesdays, I'm going to start doing a video on the update on this IRA Options Income Series. So the goal here is to use the account to generate returns that I can use as income down the road in traditional retirement age. Or maybe I can pass it down to, my daughter or future kids or family, whatever it might be. It's going to give me some flexibility there. So I'm going to call it the IRA Options Income Series. I'm going to do a weekly recap on it, just like I do Velocity Portfolio. I'll do it earlier in the week, so I'll have a video earlier in the week and one later in the week. Two different accounts. And the strategy on it's going to be a tad bit different. So I'm going to sell cash secured puts. Oh, let me go back. So it is with Schwab. Velocity Portfolio is obviously a margin account. This is not going to be a margin account. This is going to be a cash account. So, and I want that intentionally. I don't want to use margin in this account. I also want I want to see if I can use this to test this strategy over the next how many ever years and see if it can be a viable source of income down the road. Because maybe in Velocity Portfolio, I could do this as well down the road where I use this strategy to generate some additional income. So it's kind of a test account as well, if you will. So everything will be in cash. I will be selling 30 to 45 days till expiration cash secured puts in this account on stocks that I want to own or that I'm comfortable owning for long term if I want to. I'm going to try to stick with more popular stocks like blue chip dividend paying stocks or tech stocks that, we're fairly confident are not going to go under. Basically, I'm going to stay away from like under $10 stocks and meme stocks and things like that. I'm going to try to be as conservative as possible with this, just to give like a true test, right? I'm going to sell 30 to 45 days to expiration at the between 20 and 30 delta. I'll probably lean more towards the 30 delta to get more income. And the reason why is because I'm going to set a good till canceled limit order to buy it back at 50% profit. So if I sell a cash secured put and I receive $100 in premium, I'm going to immediately set a good till cancel limit order to close that for $50. So if it happens, if it triggers, that means I would collect $50. I collect 50% of the profit, and then I move on and sell a cash secured put either on the same stock or a new one, depending on my watch list and what I want to sell something on next. Also within this, let's just say it's $40,000 that I'm going to have for round numbers. I want to diversify a little bit. I don't want to go out and sell a cash secured put on a $400 stock and use the whole portfolio on one. I want to try to have it take no more than like 5 to 10% of the portfolio if possible. Probably be closer to 10 or 20% of the portfolio per stock, meaning like 5 different companies, until the account grows more. So I'm going to set that good till cancel limit order. I'm also going to set an alert at my strike price so that I will get an alert from Schwab that will let me know, hey, the price has hit this mark, and I'm going to go in and look at it and see if it makes sense to roll it, to buy it back, whatever the case might be, or it might just be to do nothing, depending on what I think of the chart. Do I think it's going to go back up? Do I think I can get out of it? Whatever the case might be. And then if a reasonable net credit is not possible, I'm going to take assignment on it. The goal of all this is to sell puts. So if I do have to take assignment, I want to get out of it as quickly as possible, but I'm not going to kick the can down the road for $5 if it just doesn't make sense, if I can sell calls and get out of it quicker. So it's going to be dependent on what the market's doing, what the stock is doing, earnings, dividends, all kinds of different things factored in, right? So this will be very fluid. So let's assume I'm doing this, and in the rare case, hopefully, that I am assigned, the goal is to not get assigned, but we're not afraid of it if we have to, because it's a stock that we're okay owning for a long period of time. If I'm assigned, I'm going to sell covered calls at or above the net stock cost. So that's going to be my strike minus any credits I've received, any dividends I've received. That's going to lower my net stock cost. So I will try to get out of it for a break even, basically. if I get assigned, I'm not trying to make money on the calls that I'm selling. I'm trying to get out of it at a break even so I can get back to selling puts. That's where the profit's going to be. When I sell these covered calls on it, I'm going to do 7 to 10 days to expiration for that flexibility, because I don't want to be sitting on covered calls for 30 to 45 days. I want to try to get out of it as quickly as possible. So the goal is to get out of it and get back to selling puts. So if the price is well below what my strike is or what my net stock cost is, then I'm either going to hold it and wait for a recovery and then get back to selling calls on it. So just sit on it and wait. Or I'm going to sell below the strike cost, or my net strike cost, at a much more conservative delta, because obviously I don't want to lose money on that. So this is where it's important that it's a stock that you're comfortable holding for a long period of time, because you may have to sit on it for a few weeks, maybe even a couple of months before the price fully recovers. As you've seen in Velocity Portfolio, I'm sitting on 100 shares of BITX that is well below my cost basis right now. But I'm not worried about it because I know eventually it'll come back, hopefully, right? And then I'm also collecting some premium on covered calls on it. I am selling below my cost basis, but it's one that I'm comfortable holding for a long term. Not super long, like years, but for a few months if I have to. And that's what's going to end up happening, because it's pretty far below my cost right now. So tracking, I'm going to use the same spreadsheet that I use in Velocity Portfolio, or that I've shown in Velocity Portfolio for BITX, which is this one here. But I am only going to be using the sheet to track if I'm assigned. So it's going to be the initial cash secured put that I open. It's going to include any rolls that I did with that particular position. Then once I'm assigned, and then once it's called away. So I'm going to use the sheet to track those things. It's not going to be all the puts that I sold before I was assigned. It's only going to be the initial put, any rolls, the assignment, and the cover calls. And that's how I'm going to determine what my net stock cost is. If I sell a cash secured put on a position and I'm able to close it out at 50% profit, that's pure profit. That goes to the bottom line, and I'm not concerned about that. I'm not going to track that in the sheet. I'm just going to track the overall performance of the account itself and how I'm doing monthly, semi-annually, quarterly, whatever the case might be, and percentage gain. So my goal at least, is to hit at least 20% return per year with this account. I think that's entirely possible. It's going to depend on the market, of course. I've read I've come across a lot of channels and have talked to a lot of people that run this, and they're right now averaging between 30 and 40%. Obviously, we've been in a bull market for the last few years, but I think it's entirely possible at a minimum to get 20%. There might be 10% years, there might be 35% years. That's fine. But just some rough math, which was crazy numbers when I pulled it up. But I plugged those numbers into an account, visualizer, and it says that if I was to do this for the next 30 years until my actual retirement age, right, traditional retirement age, then I would have over $11 million in the account if I average 20% returns per year, which is just insane to me. Those aren't even real numbers. So if I could even get a quarter of that, I think would be amazing. We're going to see how it goes. I'm going to track it and see if this is viable or not. I think it will be, but we'll find out. So like I said, all the rolls and everything like that will be tracked on the sheet, and then once once the shares are called away, that sheet will disappear, and I'll start a new one if I'm assigned on another position. The goal is to just collect the premium, only maybe get assigned a few times a year and get out of them. So I shouldn't have to use the sheet too much. That's the goal. And closing at a 50% profit, I think, is going to allow that to happen. So with all that being said, I'm going to start this probably. I'm trying to do it next week, but like I said, I've got some open positions in the portfolio right now. The market just closed a little bit here ago and has been tanking for a while now. So I'm not trying to take big losses on any positions. So I'm going to try to close them out here in the next week or so, and hopefully launch the first week of this, like I said, in the next week or two. That's the goal here. So I'll keep everybody updated on it. I will have a weekly recap for Velocity Portfolio coming this weekend, on Saturday probably. I'll update on this, and as I do videos for Velocity Portfolio, I will allude to this until we actually get it started. And then like I said earlier in the week, I will do updates on this weekly to see where we're sitting with our positions. What was I able to close out for pure profit, 50% profit or whatnot. and keep you guys updated. So stay tuned for that. As always, if you guys have any comments about what you think I should do, or if there's something you think I'm missing, let me know. I'm totally open to constructive criticism. I'm just trying to learn and see what works best for me here as well. So feel free to comment accordingly, and appreciate you guys watching, and look forward to doing the first video on this. Thank you.